Hey, what's going on, y'all? Mr. Commentator here, back with another video, and this is actually my second take doing this. I'll explain that in a little bit, but today I want to take this video to do my weekly recap of my $2,000 options trading portfolio and show you the wins, losses, why I took the trades, how they played out, and some stuff for the future and what I've changed. So yeah, let's get straight into it. Actually, let me go into my tracker here. So this is the second time I'm recording this video. It's because I changed my setup a little bit. I got a second monitor, and then when I hit record on OBS, I didn't realize that my display was on the OBS display. It wasn't on the monitor with all my tabs because I didn't have the preview enabled. But yeah, so you know what? That means this second time it should go much better because I actually know what to say, and I won't say a lot of jargon that like I did last time. So this last week, since it was a short trading week, especially with 4th of July, I didn't trade Monday and Tuesday. I came back from my trip on Monday night. Tuesday, I took my time to set everything back up, get my focus back in, read up on some more macroeconomic news, and I waited for Wednesday for the market open, and I took these 3 trades. It was 2 Tesla trades and then 1 Netflix trade. It was only on these 2 stocks, especially within that short time period, that I could find a decent amount of premium that all met my margin of safety. So that's why there's only 3 trades. But I did scale them because I'd like to ideally use all $2,000 of my collateral to maximize my return, which is not a great investment strategy, but you have to remember that this isn't a portfolio where you're buying options, you know, because when you buy something, you could use like 1% of 2,000, which is like what, $20, 20 or 2,000, bro. I don't know, I'm not good at math. And you could make like maybe 9, 8, you could make double digits from that. But when you're selling options, it's based off of how much you can put up front. So, and it's literally risk averse. So I don't see a problem with putting my entire cash on the line. Of course, that might not be suitable for you, so do whatever you would like. But all 3 contracts expired in the green yesterday. I have all my collateral back now. Account is green. We're up 0.8% this week, which is lower than I would like. I was aiming for 1% a week, but remember, 5 and up you round up. So yeah, and consistency is what that matters right now. I'm not focused on the pure profits yet. I would just like to refine my strategy, because once I refine my strategy, I can start putting way more collateral up front. And so far it's worked well the last 3 weeks. Yeah, this week, the week before, okay, maybe not the last 2 weeks. Yeah, the second week was rough, man, but it serves as a reminder. So I entered 2 put credit spreads on Tesla and then a call credit spread on Netflix, particularly because in Tesla had a gap up this last week, June 30th. I think this was Monday. Yeah, Monday, because Wednesday was July 5th. So Tesla did have a gap up, which is why I wasn't too keen on doing call credit spreads like last time, because if it gapped up that much overnight, or I don't know if it was overnight or weekend, I think it was a weekend one, then that means obviously the stock price could go higher, which is why I didn't enter it to begin with. And I didn't see previous levels of resistance at this level. It was more, here, let me go on my crosshairs. It was more of, yeah, all the way here. This was more of like a liquidity grab. I'm still improving my technical analysis, but I didn't feel comfortable. Actually, I didn't feel comfortable with doing Tesla at all, particularly because of gap up, because usually when companies gap up, it means they could go even higher, like Nvidia's case, or they could come crashing right back down to fill in the gap here. But I was looking at the 30-minute chart, and I sensed that Tesla was going to stay there for the time being, for at least the remaining 2 days, so I didn't really bother. So I entered put credit spreads, and I entered the 257.5 strike. So I think that met my margin of safety, especially with the Greeks. 250. Yeah, so I was confident that even if Tesla did come crashing down, there would be like key levels, especially at the near gap here. And it was on an uptrend still. So why fight the trend? Feel me? Never fight the trend. You follow with the trend or trade with the trend or some shit. So those are my Tesla trades. I entered another one at 252 because like I don't feel comfortable with putting all my collateral into one position. You know, I'd rather lose some potential profit for a little bit more safety, which is why I entered the 252.5 strike. Oh my god. Again, I'm using a mouse because I've just grown mouse pad because I've grown out of using a mouse. Yeah, 252.5 strike. So I entered that and I scaled in $9. It was nice. And then the next day, since I still had, what was it, $500 or $600 left in collateral, I think it was 500. I was looking for one more options play, and this one I had to be a little bit more risky on. It's still not my margin of safety, particularly because, you know, theta decay and then the Greeks. But I could only find one other security to execute it on that wasn't Tesla. Because at this point, if I wanted to do more Tesla trades, I'd get like $1 or $2 in premium because I'd have to go lower than 252, and I didn't want to do call credit spreads because if you do call and put credit spreads on the same security, you're effectively making it, you want it to stay at the same level that you entered the spreads in, and it's gonna move around and you might break even or it might end up really bad. And at the time I didn't have too many securities on the lookout. I didn't feel comfortable doing Nvidia, particularly because it was moving too much with QQQ here. So I decided Netflix because first of all, I entered on the 6th, and on the 6th when I was reading the charts, I saw this was forming a double top, and just like here, a doji candle and then a strong move down. You see this doji candle right here, and then we had the day it opened up lower, and the Bollinger Band suggests that the price wouldn't reach this amount, and it was right. So I decided to go a little bit out of the Bollinger Bands. I did the 460, yeah. Okay, that's wrong. I need to go fix that. So I entered the 460 strike because no one really likes Netflix now. That's just, maybe I'm just biased towards it. Yeah, that's purely biased. Don't take my word for it. I was confident it wouldn't go any up because, first of all, this is pretty expensive for a media service that doesn't know what to do. Again, that's my bias. So this is why I entered call credit spreads. And I think it's mainly because of this price action right here, the strong, you know, bearish body candle right there, which is why I was confident we couldn't go any further. Yeah, sure, it peaked, but you know, you could literally call that a liquidity grab or something. I don't know. So that's why I entered call credit spreads, and it turned out in my favor. Not a lot of premium, but for the 1 day risk, like $4, so like I'll take it. And I think it was after that trade also I realized like I need more securities to trade. But you know, obviously the securities they need to meet my criteria. So I pulled up my own screener here. So this is what I went through this entire list. I was looking through their options chains, and I still have a little bit more cleaning up to do, but this is the rough list for now. These are the securities that I'm going to trade options on or spreads on. I'll get into the option screener in depth like next week or maybe even tomorrow. Yeah. What else to say? Other than that, nothing else. Waiting to see how the markets will open up on Monday. Yeah, $21 net profit. The $530 deposit I'm transferring to another Robinhood account. It's my retirement account because I have no job right now anyway. So for the time being, until it clears up on the 10th, I'm just gonna use the instant deposit that Robinhood gave me as collateral. And yeah. So overall, good trading week. Stuck to my plan, never fell out. And yeah, I hope you guys learned something new. Nothing else for me to say, really. We are doing good. We're not meeting the 1% a week goal just yet because of the big setback on the second week, but we've recovered from it. So yeah, low-key at this point, bro, I don't even know what the hell to say. So hope y'all learned something. And I'll catch you later. Yeah, bye.